commodities-related investment for 2024 is definitely gold and gold stocks. And for 2025, because gold usually leads the bull market, but then silver follows, I think for 2025, 2026, I'd have to say silver and silver stocks.
In a recent discussion, renowned investor Rick Rule highlighted compelling insights into precious metals investing. He pointed out that gold, currently at $2,000, has a history of substantial gains despite being overlooked by many investors. With gold representing less than 1% of total savings and investment assets in the US, Rule believes its potential to quadruple demand within 5 years could lead to significant price surges, possibly reaching unprecedented highs. Moreover, he anticipates silver, often following gold's lead, to emerge as a strong performer in 2025, driven by increasing industrial demand, particularly in sectors like solar and health-related applications. With silver production likely to decline due to lagging investments in copper mining, Rule sees promising opportunities for silver investors in the coming years. Stay informed about these market dynamics by liking, sharing, and subscribing to our channel, and don't forget to turn on post notifications for the latest updates.
My favorite natural resource over time has always been water. But sadly, as a bad quip, water is illiquid. There are not very many investment vehicles that the average investor can utilize to participate in the water business, other than perfecting his or her access to whatever water they might need to sustain their current lifestyle or business, which is a different discussion. I would need to say for most investors in North America that North American natural gas is the most underpriced, undervalued resource out there. It's produced as a byproduct, of course, of oil, and the oil drilling that we're seeing in the Permian Basin, as an example, has created a temporary oversupply of natural gas, which is weighing on gas prices and weighing on gas companies' prospects. But the price differential between sort of $2.25 per million BTU in West Texas and $8 or $9 per million BTU delivered in Tokyo, Shanghai, or Rotterdam is too great an arbitrage to ignore. The consequence of that is that the industry is spending billions of dollars building gathering infrastructure, transmission infrastructure, processing infrastructure, liquefied natural gas infrastructure. Such a good business, in fact, that the president, Biden, had to come out against it last week. I guess it's just too great an opportunity for Americans for either Mr. Biden or Mr. Trudeau to stomach. I would say that North American natural gas is probably in the 5-year time frame the best investment opportunity in resources that faces North Americans. But I'm going to pull a bit of a fast one on you and say for your audience that I think there's real upside in gold. And a year from now, a year and a half from now, probably greater upside in the silver stocks. It's interesting when people talk about gold, how compressed their timeframes are. People asked me in one of my own Q&As a couple of weeks ago when I thought the gold price might move. And I mentioned that I began to add to my bullion holdings in 1998. And I would suggest to you that the gold began to move in the year 2000. As I recall, it was $256. It's about $2,000 now. That's 8% compound return in 23 years. In other words, gold is already moving. People's expectation of what constitutes a gold move are expectations that were conditioned on the decade of the 70s and the decade 2000 to 2010. And by the way, I'm not ruling out a big move. I am particularly attracted to the fact that gold has disappointed so many investors. That's why I like it. What would make me turn bearish? Well, I guess a balanced budget, the end of quantitative easing, the reduction of the on-balance sheet and off-balance sheet liabilities of the U.S. federal government below $150 trillion. I don't see any of those things occurring. And I need to say, before I talk about the investment attributes, that I don't care at all about a move in the gold price from $2,000 to $2,200 or $2,500. To me, that's background noise. That's keeping pace with inflation. I own gold because I'm afraid that it's going to go to 8,000 or 9,000. If that sounds outlandish, Remember, the people had given up on hope on gold in the year 2000 at $250. At the end of the decade, it was at $1,900. You own gold because of the probability, or pardon me, the possibility of hyperbolic moves. You can't say when, but the fact that it's so deeply out of favor makes me attracted. And let me give you a statistic that I'm almost sure that your listeners haven't paid attention to. The market share of precious metals and precious metals related investments in the United States is less than 0.5%, which means that precious metals assets comprise less than 0.5% of the total savings and investment assets held by Americans. Despite the fact that gold is important to you, most people can't spell it. The 4-decade mean market share of precious metals is 2%. So gold doesn't have to win the war against the US dollar. Gold doesn't have to defeat the Treasury. All it has to do is revert to mean. If it reverts to mean, which I think it will do within 5 years, you will quadruple demand for precious metals and precious metals related assets in a market that comprises 22% of the global market for savings and investments. That's precisely what I think will happen. What is my ultimate price target? I'm not smart enough to give you one. I know that prices are set on the margin. And I know that in a commodity where prices are set on the margin, if you quadruple demand, it can have a really interesting impact on price. Now, partially, this might be self-correcting, which is to say, although history doesn't tell us this, that an increase in the gold price would constrain demand. My own experience is, perversely, that people don't want to own it when it's cheap. And the price rise validates the narrative when it's dear. Suffice it to say, my dark horse candidate for commodities-related investment for 2024 is definitely gold and gold stocks. And for 2025, because gold usually leads the bull market, but then silver follows, I think for 2025, 2026, I'd have to say silver and silver stocks. Yeah, remember the compound deterioration of the value of the denominator. You're denominating it in US dollars. And by the way, I would suggest that your listeners, when they look at the impact of inflation, don't consider the CPI. I don't think that the real inflation rate is anything like 2.8%. Among other things, check this out. The CPI doesn't include tax. As a cost of living index, to ignore the largest component of household expenses is farcical. I believe myself, and I'm an old fat rich guy, I don't spend any money. I believe that the deterioration of the purchasing power of my dollar is more like 7%. So the idea that my purchasing power is deteriorating at between 5 and 7% compounded, and juxtaposing that with the statement that gold is at an all-time high, would suggest a deficiency in arithmetic. You know, I need to say that in terms of my physical holdings, they're overwhelmingly gold, because my physical goes to address my fear. And I consider silver to be more speculative than gold. My experience has been over 50 years now, sadly, that the momentum is established by gold. And when the precious metals narrative takes hold, then silver moves further and faster. And what you say about the emerging demand for silver, I think, needs to be reiterated. Some of the green initiatives, which is to say solar power, do work in places where the sun shines. The problem with solar is that they try it in Germany where the sun doesn't shine. But in places like Calexico, California, or Phoenix, or any place between the Tropic of Cancer and the Tropic of Capricorn, solar works well. And without silver, you don't have silver. Solar. The reflective properties of silver are centerfold. But what people need to understand around silver is the increasing use in water treatment, sewage treatment, and as a germicide. The germicidal properties of silver are incredibly important, and silver utilization in those health-related capacities is the biggest non-solar use of silver. The World Silver Institute suggests that about 1.2 billion ounces of silver will be used in fabrication this year. Some amount of that can be obviously recovered through recycling, but an important component can't be recovered through recycling. And then finally, the dark horse around silver is that so much silver is produced as a byproduct of copper, lead, and zinc production. And at least in the copper space, the investment that society has made in new copper mines has lagged for 30 years. What that means is that over 5 years, the byproduct silver production from copper, lead, and zinc mines will inevitably drop.
Thank you for joining us today for an enlightening discussion with Rick Rule on the investment potential of natural resources and precious metals. In summary, Rule highlights natural gas as an undervalued opportunity, while also pointing out the promising outlook for gold and silver. He emphasizes the importance of understanding inflation dynamics and the role of precious metals in wealth preservation. Silver's increasing demand in various sectors further enhances its investment appeal. If you found today's insights valuable, remember to subscribe to our channel, like this video, and share your thoughts in the comments below.